Oh, we're live. Okay. Hi, David. Welcome to Venture with Grace.
Thanks.
So to start the show, I would love for the audience to get to know you a little bit more. So you created your own major at Stanford. It was technology and music, and then
Mhm.
fast forward to, today you're the founder of Lobby Capital. Like, what were some? So I know that you were like one of the um first one of the startup lawyers for Yahoo because of like Jerry Yang was in your dorm at Stanford. And can you tell us a little bit more about what were you doing as like in your lawyer era that you have took into your investing career? Obviously, you have such a incredible portfolio. Before we get into your amazing portfolio, why don't we start with what were some early lessons that you've learned that you kind of like took into being a founder of a fund as well as like investing in amazing companies?
Yeah, sure. I mean, it is funny. I was just talking with someone today about the idea that I became a VC. There was no reason that I should have been a venture capitalist. No one should have allowed me to be a venture capitalist, right? I had never been a founder. I didn't have a business degree. I had a law degree. I didn't, there are just a lot of reasons why it didn't make sense. On the other hand, I was 100% fanatical about startups. And when I returned to Silicon Valley in 1997, after having practiced law in New York for a little bit, I started representing startups. And the second I did that, I was like, oh my God, startups are amazing, right? There's just something astonishing about this idea that you can have an idea for how to solve a problem and go about it and actually solve that problem. And other people have the problem. They're like, oh my God, I'm so glad you solved that problem for me. And I'll even pay you for it, right?
Mhm.
And so I think everything I did in the law has played a role in some moment or other in my experience working with startups, because you have lots and lots of pieces of the journey. And I've been very lucky in that I've funded a handful of companies that have gone from a couple or a handful of people to 1,000 people, have gone from zero in revenue to more than $1 billion in revenue. And along that way, you see all sorts of things. So I had been a corporate attorney, so you get to see things like, okay, M&A, how do we buy things and sell things? I got to see a ton of financing events. And to this day, right, when I'm excited about funding a company, I'll say to the founder, so here's a term sheet, and it's absolutely plain vanilla. And here are the 3 things I'm asking for that you may not love. And here are the things you'll want that I don't love. And inevitably the founders say to themselves, well, he's clearly gaming me, right? He's trying to play a game because no one would tell you all the things that you're going to argue about. But because I've been doing this for 25 plus years, I just think there's no point in fighting about stupid stuff that you're going to agree on. So let's talk about the stuff that matters. The stuff that matters are ownership and control and those sorts of things. So all of that was stuff I learned as a lawyer, and I learned the implications. Why do I care, right? I mean, most founders and most venture capitalists can tell you what the term sheets say, but they can't tell you why they say it. And because I had been an attorney, and because I've now taught this stuff both at Harvard and Stanford for 15 years, I can tell you exactly why you care and why I care and why it exists. And I can give you examples of all the terrible things that have happened, all the reasons that you should care about these things. So even though I think the lion's share of my job has nothing to do with the law, every piece of the law that I've touched as a litigator, as a corporate attorney, as a licensing attorney, as an intellectual property attorney, has come up some way or other over the 24 years I've now been a venture capitalist.
I guess like what would be like 3 things that for investors or for like founders that they should like pay attention to in the business like law realm? This is such a random question, but like since you mentioned
Yeah,
like
yeah,
there's
yeah.
a lot of like things that people don't know, but like what would be, let's call it like core 3 advice that you give people?
Yeah, I mean, I guess by and large, the answer is that the law is really not most of what is done on the legal side is very straightforward,
Mhm.
right? It's completely standard. And the reason it's standard is because over tens of years, it's been developed to find the thing that is the most streamlined path to help companies be successful, right? So, gosh, I wonder if I should go incorporate in Georgia instead of Delaware. No, you shouldn't, right? The Delaware law is well-defined and clear, and therefore it's a great place to start if you're going to build a corporation. I wonder if I should rethink vesting of shares, or I wonder if I should only sell common stock to investors, not give them preferred stock because preference is obviously a ripoff. No, it turns out you shouldn't. And why does preference exist? It exists so that you can price stock options at a lower price than the price that someone paid to buy shares in your company, right? So there are a million things in the law that have been evolved over years and tens of years to be this standard stuff. And what I would say is, as a general matter, don't bother fighting those things. They're just standard stuff. They are not designed to help VCs make your life harder, et cetera. They're just designed to help companies get rid of friction and be successful. I do think that it's always important to think about intellectual property and what is the thing that's differentiating your company, and can you protect it in some way? I think it's always important to think about, the people who are building your company, and are you treating them fairly, and are they treating you fairly, and can you protect yourself when they leave or when you want them to leave, right? These are things that are both legal things but very standard businessy things. But I don't think there's any magic. And I guess my biggest message is the law has really evolved to make this simple and clear and clean, and anything you do to try and reinvent it is not likely a very good use of your time.
I wonder, since we have chatted about the law, but I feel like your investment track record is amazing. I wonder, how do you kind of recognize, for example, like a Splunk or GitLab, or how do you recognize these company before they become an obvious choice? And when it comes to um early stage investing, how would you advise younger investors? Would it be a numbers game, or do you think you have to be an expert in a particular domain? Obviously, I feel like you have invested in various different sectors. What would be your advice for people who just kind of enter the game?
Yeah, I think it's a fair question. I mean, there are things that I would not invest in without expertise, right? If someone thinks they have a biotherapy that's going to solve something through genetic mutation or whatever, you probably need to have some expertise that I don't have. But I'm a software investor, which is to say that almost everything I do pivots on software in some way or other, and the ability to be able to use code to help solve the problem. And that one's easy, because it turns out that by and large, software can solve problems, and you can assume that people can figure out how to make it work, as opposed to, oh, could this even work? One of the earliest big investments in at August Capital, the predecessor to Lobby Capital, where I am now, was an investment in a company that invented Wi-Fi. But the bet was, gosh, I think that science is such that you could figure out how to move data efficiently through the air. Well, that's an incredible proposition. And I personally am in no way qualified to judge whether that's true or not. We've looked at all sorts of wireless power companies similarly, we can move power through the air in an efficient manner. Well, in most instances, it's obviously not true, but in some instances, they're using interesting technology that you should be an expert in. So, but that's not what I do. I do things that require you to be smart people, have an interesting idea, and create some differentiated solution that is not rocket science. And in that case, then how do you know? Well, first of all, you don't. Right? In 20 some odd years in the venture business, I've funded 45 companies, and I bet about 20 of them have gone out of business. And I thought all 20 of those were going to be the next Splunk, and they weren't. So part of it is you have to understand that The venture business is about making bets and helping companies be successful. And some of them hopefully will be, with an understanding that most of them will not be Splunk. They won't be GitLab or Bill.com, et cetera, right? That's not very helpful to young investors. So then, having said that, what you need to spend your time doing is meeting amazing people, talking to as many amazing people as possible so that you can calibrate the level of amazingness, right? Because there are lots of amazing people, but it's a little bit like, my daughter played soccer in high school, and we would go to these tournaments. You'd fly to Arizona to watch high school girls play soccer. And everyone on that field was a very good soccer player, right? These kids had played soccer since they were in, single digits, and they had practiced hours and hours. They all were some of the best soccer players in the country. And then if you watched these games, there were a very small number of these young women who were astonishing. And you knew instantly, all you had to do is watch all these soccer players, and you're like, oh, wait a second, you are different. And the reason I know you're different is because I have now watched 1,000 hours of high school girls soccer to know that you are differentiated. The same thing applies here. If you have not spent 1,000 hours meeting with astonishingly good entrepreneurs to get it to calibrate what that looks like, you won't know when someone appears and is better than the rest. And so I just think you need to spend a lot of time meeting amazing people and hearing their story, and then figure out what you think is compelling, who you think can build great businesses, who can tell a compelling story, who can sell, how do you raise money, how do you convince people to use this thing that others shouldn't, and and what I've learned is, over time, you recognize these people. So my most recent investment is a company called Advantage Discovery. And it's the team that built Search for Pinterest. And when Lance and Nigel, the founders of Advantage Discovery, described their business, I said, oh, okay. You are astonishing founders. You have done this before. You understand the domain in a way that almost no one does. You're bringing it to a business reality in ways that are differentiated and thoughtful and defensible and protectable. And you can convince people that what you're doing is exciting. Please take my money. And then, of course, it turns out other people wanted to give them money too. So then I had to, wait, I have to convince you to take my money because everybody wants to give you money, right?
I wonder, so I know that you created the Lobby conference. I wonder, how does a conference plays into the game of meeting amazing people? Do you feel like that's a good sourcing mechanism, or more of a vetting mechanism? How, I guess, how does that play into your I guess into your routine as an investor?
Yeah, I think it does both, to tell you the truth. I didn't create it to be transactional. I didn't say, oh, I'm going to create the Lobby conference because I need to meet 250 people, and then I have to tell them they should show me their best deals, and then I should look at those deals, and then I'm going to do the best deal, and therefore I will win because these people I've invited will have traded me their best deal for attending my conference. That is not what I did. What I did was, I went to a bunch of conferences because I wanted to meet amazing people, and the conferences were designed in a way that really didn't allow for that, right? They allowed for me to sit in a dark room and listen to the CEO of Netflix talk about Netflix. Well, I'm not funding Netflix. It's a public company. You're not telling me anything I didn't know, and all I want to do is meet amazing people. So I created the Lobby conference so that I could meet a bunch of people, not because I thought oh, I'm going to lock down a bunch of deals or whatever, but because I like people and I like meeting amazing people. And then I asked a bunch of my friends, if you were to have an event like this, who would you want there, right? If it's a big gathering of the folks who you think are the most interesting founders and executives who are thinking deeply and building cool stuff, who would they be? And then I got a bunch of recommendations. So prior to the first Lobby conference, I had never heard of DJ Patil. DJ Patil was like I'd never met him. I didn't know who he was, but then I can't even remember who recommended him, but someone said to me, there's this amazing guy named DJ Patil, who is the chief data scientist at eBay, and you should invite DJ. And I said, oh, really? I didn't even know there was such a thing as chief data scientist, and what's he do? And blah, blah, blah. And eventually said, great. And I invited DJ, and DJ came, I think, to the very first Lobby conference. And I spent time with DJ, and he was so nice and so smart, like unimaginably smart. And he was thinking about interesting things. And he is now one of my dearest friends. And it wasn't because, oh man, DJ is one of the world's leading experts in data science. Although he is, it turned out he ended up being the chief data scientist for the Obama administration. He ended up being the chief data scientist for LinkedIn, et cetera. It's because he was the kind of person I wanted to spend time with. And then I said to DJ, who should I invite? Who you like spending time with, right? And then I got to meet amazing people DJ thought were fantastic. And so the Lobby was just about that. It was just about meet awesome people, have them introduce me to their awesome friends. And over time, I was convinced that I would end up working with some of them in some capacity, but I couldn't have put a time frame on it. I just wanted to meet amazing people.
I wonder, when you first started, like, let's say the conference, I'm sure you already had your fund, but like, I wonder, were you self-funding these like major ventures? Because I feel like it would be really expensive to ship a bunch of people to Hawaii. So I wonder, how does that kind of like look like in a like founder perspective as a founder of the conference?
Yeah.
Hi, Kevin. I want to say hi to the audience. Hi, Kevin. Anyway.
Hi, all. You're exactly right. The big question I had was, if I start this thing, I'm going to invite. The first one was 150 people. I'm going to have 150 people come to Hawaii. I'm going to have dinners and lunches. I'm going to have this crazy game that everybody plays. I'm going to do all these things. How much will that cost? And I thought, well, I can charge people a reasonable amount of money, but not that much, because I want them to come. And then I bet you I can get some sponsors to come pay to be part of it. And so I reached out to some friends who were building, wanted to connect with this community, and said, would you be interested in sponsoring? And, Fenwick and West and Perkins Coie and Silicon Valley Bank, and a number of these folks have been supporting this endeavor since day one. And that's been amazing. And my goal was to try and get close to break even, to try not to lose too much money. And I remember talking to Chris Shipley, who was running the demo conference at the time. And Chris said, don't get too discouraged when you lose an infinite amount of money on the first conference. It takes time, et cetera. But it turned out that my first conference only lost a little bit of money. And I've had 30 conferences since that time. And they kind of break even-ish. Occasionally we lose some money. In fact, we just started a couple of events called Lobby Elevate. And Lobby Elevate is these are one-day events designed to help underrepresented founders to be successful, to help raise money, et cetera. So we have a female founders summit in August, and we have a founders of color summit in the next one will be in February. And I didn't want it to be expensive. I wanted the best female founders, Black and Latinx founders, to be able to come and help create value for those folks. And so we underpriced it, and we lost hundreds of thousands of dollars, but it just seemed to me like that was the appropriate use of hundreds of thousands of dollars. And hopefully, future conferences don't lose as much.
I wonder, when it comes to putting together. So I guess when you started Lobby Capital, were you investing? I know you invest in the enterprise SaaS space, but I wonder since you have been in the ecosystem for over 25 years, what does the journey look like as a fund? And in terms of fundraising from LPs, I guess what were some interesting lessons that you've learned? And since I feel considering the 25 years, maybe there was 4 or 5 different stages as maybe call it the when you first started like a fund, the first 5 years to maybe like nowadays, maybe the most like recent 5 years, what does that journey kind of look like in the, I guess like as a founder of the fund?
Yeah, it's sort of an interesting question, and it's when I got lucky, because when I joined the venture business, I joined a group of people who'd been quite successful, had raised a fund, had delivered a lot of returns to people. So Dave Marquardt, who founded August Capital and asked me to join the firm in 2000, had been the only private investor in Microsoft. And he sat on that board for 33 years. He'd been the first investor in Sun. He'd been the first investor in Seagate. John Johnston was the first investor in Intuit, right? So Andy Rappaport in this company I described that was the creator of Wi-Fi. So they had been very successful, and they were able to raise funds based on that success. And I joined them as this new person, and the LPs said, "Well, we don't know why you would hire this lawyer, but if you as investors think that you want to invest your time and money in him, then great, we're happy to see it." And then the question was, okay, how did I do over time? And between August 3, when I joined, and 20 years later, when we had finished investing August 7, the founders of the firm had retired. We'd seen a lot of cycles, but we had managed to continue to deliver returns, to raise capital from a largely similar group of people. So the biggest shift came after we finished investing August 7 in 2020. The founders of the firm, everybody who was there when I got there 20 years earlier, had retired. And my partner, Eric, and I said, well, what do we want to do now, right? Do we want to raise August 8, or do we want to do something different? And that was the time at which we said, you know what? We were spending all this time building this ecosystem of amazing founders with the Lobby Conference, and let's lean into that. Let's call the firm Lobby Capital. I had this extraordinary friend named Buddy Arnheim, who I had been wanting to work with again. I had worked with him 25 years earlier. I knew him to be a great founder, a great investor. And we said, well, let's have Buddy join us and let's go raise money. Like, let's go say, we're going to raise a contained fund of we're going to invest in Series A companies. And if any one of them is successful, it'll deliver a multiple of the fund. And that's what we did. And we're now out raising Lobby 2, and it's the same question. It's like, okay, what do we do that we think will create value for our investors? And let's demonstrate that works, right? I guess the biggest takeaway that I'll give you from the fundraising process, so I was not involved in the raising of Fund 3, but I was involved in the raising of August 4, August 5, August 6, August 7, Lobby 1, and now Lobby 2. So 6 funds. And the thing that's interesting is it's actually a really valuable process, because you have to justify the choices you're making. You have to explain that, you know what? This is how we think about the venture business. And here's how we think we're going to see the best deals. Here's why we think we're going to win the best deals. Here's why we think that we're going to own enough of the company to make it useful. Here's why we think these companies are going to be public companies and deliver returns. And then limited partners have to say, yeah, I think those things are true. Here's $10 million or $20 million or $50 million, right? And then over the next 15 years, you're either going to prove yourself right or wrong. So you're going to raise 3 more funds before you even have any data about whether you were right about any of that.
I wonder, so like without the data, like how do you kind of convince people to like invest in the fund? And like I wonder in terms of like portfolio construction, as you mentioned, like each company ideally they have to return the whole fund.
Yep.
How do you like do it in a way that's like maximize your success rate? And in terms of like picking the Series A companies, since like I feel like I'm an angel investor, so I would not know like the well, I know like by chatting with a lot of investors, but like I wonder what's your thought about like picking Series A companies versus like being an angel investor or betting on like the early team kind of stage?
Yeah, I mean, look at you. The good news for you is you just try and meet amazing people, and you hear their story and you get to know them and you think, well, this is an amazing team. If they could do that, that'd be astonishing. And you invest money, right? And because you're investing at a relatively low valuation, a relatively small amount of money, if any one of those is successful, then you'll do incredibly well. You know, the founders of Uber were at my Lobby conference and raised a seed round, just saying to people like, hey, you know, here's what we're building. We think this thing should exist. Does anyone want to put in money? And, you know, $50,000 at that conference invested in the company ended up worth $50 million in equity in the company. So that's amazing, right? You could do a lot of crazy things if 50,000 turns into 50 million. For me, I'm looking for something different than that. And so I'm going to give you $10 million. I'm going to give you $6 million. I'm going to give you $15 million. And I'm going to spend a lot of time over the next 10 or 15 years trying to help you be successful. So I need those companies to be more likely successful than an angel investor needs their companies to be successful.
Can I ask a piggyback question on the Uber situation? So obviously, like I've also listened to like, so we have some investor who invest in Uber at the beginning, but like there's also a lot of investor that pass on Uber.
Yeah.
I wonder what would be your like initial thought on like reflecting back on like the decision on investing or not investing in Uber? Like what was your thought process behind it? And then why do you feel like this company kind of like had a really major success versus like, you know, maybe there's like 5 other company also pitch at Lobby Conference that day, or like not pitch, but like chatting with other founders in the Lobby Conference that day. Like how are these so different from like the rest of the companies? Because like, yeah, it's a major success versus like most of the other companies.
Yeah, no, it's a fair question. So because I was a Series A investor, I wasn't involved in those angel conversations.
Mm-hmm.
But I did spend time with Travis when he was raising his Series A, and I did turn down Travis when he was raising his Series A. So why? Like, what did I get wrong? And the answer is, so the thing that I'm looking for when I'm investing in Series A companies, I'm looking for product market fit. We've built this thing. The customer wants it. They're using it. Ideally, they use it more tomorrow than they used it yesterday, right? They're willing to pay for it. Like whatever information we have on that is valuable. And the more information you have on that, the more likely you understand if the company's going to be successful. And so I'm looking for product market fit. I'm looking for big markets because I have a multi-$100 million fund. I need each deal to deliver hundreds of millions of dollars in return, which means the company needs to be worth billions of dollars. So it needs to be a very big business. I need to be an astonishing team because I think it's almost impossible to do any of those things, right? And so when I met with Travis, I knew that Travis and Garrett were great entrepreneurs. I had backed both of their last companies. I backed Red Swoosh. I backed StumbleUpon. I knew these folks were the sorts of entrepreneurs who would, you know, run through walls. They had product market fit. They could show how people were using their app and getting rides and then repeating those rides and saying very good things about it. People loved the Uber experience. The thing I got wrong was I said, I don't think this is a big business. It was only Uber Black. And I talked with my partners and we said, like, how many places will Uber Black really work? It'll work in big cities. It'll work in Miami. It'll work in New York. It'll work in Chicago, work in LA. It'll work in San Francisco. And how many people are willing to spend $100 for a black car instead of a taxi? You know, some number, but not a lot. And so we just didn't think it was a big business. We thought that it was a great, cool business, but it was hard to see how it became a multi-billion-dollar business. Now, as it turns out, we were, of course, wrong about that. But it's not that we were wrong about Uber Black. I don't think Uber Black is a big business to this day. What we were wrong about is that it was only Uber Black, right? That ultimately this would enable an alternative to taxis And it would enable an alternative to you having your own car. And it would enable an alternative. You could go to a party and not worry about drinking. You could send your kids to the movies and not have to drive them, right? There are all these use cases that we did not predict. And as a byproduct of that, we said no when we should have said yes. And that's the kind of thing that happens all the time, unfortunately. And I guess I only take comfort in the idea that at least I got to see it. I just made the wrong mistake. I hope the next time I see an Uber, I get it right, you know?
I wonder, like, what would be the things that you would do today if you're going back to like the Uber Series A stage? Like, would you ask them like a different question, or would you do like a different like vibe check, or like how would you kind of um figure out like if like maybe like a different vetting questions or something? Like, how would
Yeah.
you approach it differently?
I don't know. I mean, you're gonna miss some of these things, right? You're just gonna make a mistake. But in all fairness, I think it's spend more time with the founders, do a better job of understanding the business, what their business is today, the dynamics of the business, so that you can then go, oh, okay, I get this, right? I turned down Reid Hoffman's Series B in LinkedIn, and I had a lot of data and I loved Reid and I thought it was interesting, but I just thought the price was way ahead of the actual product, et cetera. And in that instance, the thing that I got wrong and that was misunderstood, and I give credit to David Z over at Greylock who did the deal, and he did not get confused about it, was the real issue is that this is an extraordinary social construct, and that it was already clearly going to be capturing the profiles of a huge number of people. And if you had captured those profiles, they would be extremely valuable, right? And I was looking maybe at the wrong thing. I was looking at the micro when I should have been looking at the macro. And so over time, you learn to sort of pay attention to these things and say, all right, what's the big picture opportunity? How great is this team? If this were to succeed, are there ways in which it could succeed bigger than you think, And so hopefully I don't miss another Uber, another LinkedIn. But I sure hope I see another Uber and another LinkedIn. So you just have to keep kissing frogs. That's the job.
I wonder, okay, so let's talk about like the successful investments you've made. So for example, the
Yes,
Splunk
thank you.
I'm sorry, but like yeah. So also like you're an investor of Splunk, and then you were the board member for like 13 years. Like, why don't we talk about like how do you kind of like recognize the company before everybody else, and like what were some lessons that like you've learned from like investing at like a company that's like from, I guess, like very early stage to IPO?
Well, Splunk was an interesting one. I got introduced to the founders of Splunk. There were 3 founders, and I got introduced to them by their lawyer because their lawyer represented a company I'd invested in. So I'd invested in this company, PayCycle, and a guy named Mike Patrick from Fenwick and West was the lawyer at PayCycle. And I got an email from Mike, and he said, I really like these 3 founders. I don't know exactly what they're building, but it's probably worth you spending time with them. And I thought, well, Mike's a great guy. I'd be happy to meet anyone he thinks I'll like. And so I met with these 3 founders. And it was a very interesting conversation. I really liked the founders. I thought that they were thoughtful. They had all done things before. They hadn't had huge successes before, but they had worked in good companies. They'd seen a bunch of great stuff, and they described a business that was, how do you take, when something breaks in a system, how do you figure out what broke when there are lots of different possible, ways they could have broken, when these systems are connected to other systems, et cetera. And so they were working on a solution that would allow you to track a transaction through a system without having some unique identifier, because that would add a bunch of load. Made a ton of sense. So I called a bunch of people to do diligence on the idea. They had some people who they were talking with about being customers, et cetera. And I got back together with the founders and I said, the thing you're working on is interesting, But when you talk to your potential customers, it's not their biggest problem. Like the way you're solving it is not their biggest problem. They have other things they're worried about. And so I worry that this isn't actually going to be, it's going to be harder to sell than you think. And so they went off, said, oh, well, thank you for the feedback. They were a little bit disappointed and a little bit annoyed, like, no, David, you're supposed to give us money. And so they went off and did their thing. And eventually they came back and they said, we've been thinking about what you said, and we have a new solution that we think is, solves the problem. And I said, oh, great, let's see it, And so they described for me what they were building, which was basically a search engine that sat on top of log files, right? There was no concept of big data at the time. There was just this idea that every system would produce log files. And when the system broke, you'd go and look at the log files until you figured out what was broken. They said, look, we search everything else. Why aren't we searching log files to figure out what's broken? And they built kind of a cool demo. And my reaction was, that is so smart, right? Like, oh my God, of course it would make great sense if you're trying to debug a system to be able to just search across log files to find the faults. So then I said, that's super interesting. Can I introduce you to some folks who have to do system debugging? And they said, yeah, sure. And I introduced them to folks, and everybody they talked to said, I want this. If they can build this, I want this. And so in the end, I just said, like, you know what? Every smart person I introduce them to wants it, and it makes perfect sense to me. And I've really enjoyed the time I've spent with these founders. I'm going to fund the company. And proposed a financing. We got they pushed back. We had some back and forth, and ultimately we came to an agreement about a financing. And then we got off to the races and started building the company. And it was not a straight line. It was hard, right? First, they had to actually build it. And it turns out building something that can consume billions of data points in real time is actually really hard. And to be efficient and to work and to allow you to search and all these things. It took 2.5 years before the first product was released. Then it was like, oh, well, how do you get it in front of people? And luckily, they were very clever, and they really, in many ways, invented freemium for enterprise. Nobody had really given out something for free until then. And the Splunk guys said, well, let's just let everybody use it, but we'll limit how much data they can use in it. And so 10,000 people downloaded this thing and were using it in various ways. And then they wanted to use it more. And, Splunk would see they were using it more, and they'd call them up and say, I guess you have to sign up for a license. And by that time, people would be like, all right, great. So a lot of it was right place, right time. But most of it was, these are very thoughtful entrepreneurs who've solved a real problem in a smart way. And they've listened to their customers who said, I wish it did this thing, and they'd make it do that thing. And so they sold $1 million worth of Splunk, and then 10, and then 100, and then, 200. And then we took the company public, and then they sold $1 billion worth of Splunk. And, and ultimately they sold the company for $30 billion. It was almost to the 20th anniversary of me funding them that they sold the company to Cisco for $30 billion, which means they generated $1.5 billion in value a year, which is just astonishing, right?
Totally. I wonder when you are, for example, when you are recognizing the company, you mentioned a couple of things. One is like sending them to a bunch of like customers or like potential customers, and you're hearing like great feedbacks. What would you ask the people that you've sent? And then are they like direct customers, or are they more like, oh, they're just like smart technical person? How do you kind of like verify like who would be like the right audience to send to? And is there like, so I guess like what is your diligence process kind of like involved with like being diligence of like a certain company, or versus like what if you're like hearing not so good feedback? Like how would you kind of like react to these feedbacks?
Yeah, I mean, you hope you get not so good feedback so you can avoid the problems, right? And the reaction, not so good feedback, is you're done. You just say, hey, thanks, it's not a good fit for me. I've certainly been there where it's like, oh, I thought that was a good idea. And then they said, this is a terrible idea. And you go, yeah, this is a terrible idea, and don't do it. Don't fund it. The very best answer is to put the company in front of potential customers and say, pitch your business to them, because it tests whether they can pitch the business in a meaningful way. It gets to test the question of, is this solution valuable, right? How does it create value, and will it be easy to sell? And then, and if it turns out it's amazing, and these friends of yours say, oh, they pitch me and it's amazing and I want to buy it, it's really valuable in two ways. One, you've discovered that this is a interesting technology that people are interested in, want to pay for. And two, when it comes time to say to this company, I'm excited about what you're doing and I'd love to fund you, you've already introduced them to multiple customers. So they like you. They're happy because they're like, oh, I'm working with Microsoft now when I never would have, but you had these relationships and you introduced us to them. And so, I think that is the most logical path to doing diligence. And, one of the nice things about the lobby gatherings and this incredible group of people is there's almost nothing I look at where there isn't someone who's come to a lobby conference who isn't the perfect customer for it, Mm-hmm. And so I can reach out and say, hey, Grace, I thought this was interesting. Would you mind spending an hour and telling me what you think? And you would say, like, oh, sure, I'd be thrilled to, right? Because I'm not trying to waste your time. I'm putting something I think is interesting in front of you. I'm valuing what you have to say about it. And then I get valuable feedback. And so it's really a win-win-win. And that's what I do in every instance.
I wonder, so like when it comes to portfolio construction, so like I feel like since you're in like Series A and like above, like I feel like that's taking more, people are like taking a lot more like concentrated approach versus like it's a numbers game. I wonder, when you are picking for Series A companies, like from a sea of company that raised seed, like what would you say would be like 3 things that you like, if you're advising the people who are investing before you, what would you say would be like the 3 things that you would tell them?
Yeah, look, when I used to talk about what I looked for in a great company, mm-hmm. and I used to say team. It's all about team, and then it became clear that actually there is more to it. And my then partner Trip Jones, who's now over at Uncork, said, well, it's really team, TAM, right? It's about the team, but it's also about the total addressable market. And I think that's right. You're trying to meet teams of people who are great sellers and charismatic and engaging and have foresight and are experts and all these things that will help them to be successful. And so that's the vast majority of what I look for. And then TAM, like, you have to be building something big and exciting in order for it to make sense in a portfolio for that, where I have raised hundreds of millions of dollars. Now I've already described how I messed that up, but that's a thing to look for. And then ultimately, the best companies are solving real problems, right? So what is the problem you're solving? And is it a real problem? And is your solution a good solution? And if so, are there lots of people who want to buy that, right? So I funded this company, MaintainX. And, oftentimes I look at companies and I have no idea about the market. I don't think like, oh, I'm really looking for a company in this particular space. So this is, great founders, and I had known them from another company I'd worked with. They launched this, basically an app that allowed people who are managing businesses to use their remote workers to measure things on their smartphones, to say, hey, if you're closing up the McDonald's store, here are the 17 things you have to do, and mark them off when you've done them, right? If you're the person who's in charge of cleaning the room in a hotel, here are the 17 things that you need to do when you clean a room in a hotel, including measuring what's the level of shampoo. And okay, here it is. So they launched this app, and 100 businesses download it and are using it. Mm-hmm. And I met with the team, and you're like, well, is that enough product market fit? And is this really a big market and whatever else? But I loved the founders, right? Chris was CEO. Hugo, who had worked with Chris and the previous company, were really great founders. And Chris was such a smart thinker about business. And he described how he thought this could be used in lots of big and interesting ways, et cetera. And I just thought that the vision was smart. The opportunity was smart. It was giant if it worked. They could do it, you know? And so I funded the company. That whether it works or not then is a million things. And it just turns out this company now has most recently raised money at $1 billion and has been, is in the tens of millions of dollars of ARR, and it's really working, and that's a lucky thing that was based on really smart people solving a very clear and obvious need that was a very big market.
I wonder, when you're putting together a portfolio, are like your LPs gonna ask like, oh, like as a generalist, like how would you approach the market, or like would that not be a problem since you already have
it's a huge problem. It's constantly, LPs always ask. They always say, so what do you think are the exciting verticals, and how are you thinking about this, whatever? And I always say the same thing, which is if I knew that, I'd be an entrepreneur. If I knew the answer, I'd be an entrepreneur. We can't see the future, but we can back amazing entrepreneurs who we hope can see the future, right? And so I don't limit myself by a particular assumption about what great entrepreneurs are going to do, what they're going to solve. I just meet with a lot of amazing, entrepreneurs and say, what are you trying to solve? And I hope that when they describe it, right, when a Chris Terlica says, hey, this is kind of a wacky market, but I think that the maintenance of, heavy duty diesel truck engines and the maintenance of McDonald's stores and the maintenance of a concrete manufacturing plant all have this shared challenge, and I can solve that problem, that I say, that's amazing. Let's go do that, And so it's how I end up funding a company that's, Bill.com, which is, digital payments for small business. And then I fund a company called like Ebates, which is a marketplace for rebates in the consumer space. And then I fund a company, like a GitLab or a Splunk or a Fastly that are hardcore enterprise infrastructure companies. And then I fund a company like Remix, which is doing Instagram for AI, right? It's because they're great teams and they're doing cool stuff. And I want to be part of that story.
I wonder, when it comes to like, you obviously have a lot of like really amazing companies that you have invested in. I wonder, like, when you were first, like, as a first time investor, like, what was the first company you have invested in? And how do you deal with what if like some company just like dies and then like, or like, let's say like when the time that like, let's say call it after 3 years, you have joined a venture firm and then like the performance have some sort of like, you can calculate all the important metrics, the LPs will be able to tell you, like, I guess, what was those kind of like journey kind of look like for you? And obviously you are very successful, as like after 25 years, you're still running a successful fund. And I wonder, like, you must have seen people who were not able to like continue the journey. What do you feel like you have done right versus like these other people who like, started like switching careers?
Well, first of all, the thing I did right was get lucky. I had the good fortune of funding Splunk. If I hadn't funded Splunk, I would have, that would have been a very different story. On the same time, I got unlucky. If I had funded, LinkedIn and I had funded Uber, that would have been astonishing. So, but I've been very lucky. I've backed amazing people who've built really big businesses. And so I've gotten to continue to do it. And one of the challenges is it takes a long time to build a big business. And you don't necessarily have that much time, right? You're trying to build a venture career, and 8 years into my venture career, it wasn't obvious that I was a great venture capitalist, and I could easily have been told to go home. But luckily, I had patient partners, and Splunk was looking interesting, and I had some other stuff that was working, and so I was like, okay, we're going to give you the benefit of the doubt until this works, And then after that, I remember saying, like, after Splunk worked, it went public in year 11 and we made hundreds of millions of dollars. I'm like, ta-da, see, I can do this. Then my mantra was, I just need one more Splunk before I die. Like, because that's the reality is, you're only as good as the last great deal you did. And so, and now I've had 4 companies that have gone public and traded up to north of $10 billion. And that's amazing. And I still now say, like, gosh, I hope I have another, right? What's the next one? Is it Maintain X? And if it's not Maintain X, which is it? And and is Advantage Discovery my most recent investment, or is it going to be the next one? I don't know. And then just to your point, like, okay, my very first investment, I spent almost a year before I'd invested in anything. And I met this guy, Rene Lacerte, and he actually had been introduced to one of my partners because my partner had been on the Intuit board, and this was a small business payroll business. And they're like, oh, you should like this. And my partner was like, ugh, that's so boring. I said, here, David, you see if you like it. And so I spent time with the founder, this guy, Rene, and I liked him. And is payroll big? I don't know. Let's see if you could do it. I just did a ton of work, and I really liked Rene. And I thought there was a big business to be had here. I did more work on that deal than anything I've ever done, because your first deal really matters. And finally said to my partners, let's give Rene a term sheet, and we'll be the first investors in this company, et cetera. And they had done enough work and sort of heard enough that they're like, okay, even if David loses his money in this deal, it's not a stupid idea. And so this seems like a good first deal. What I did not know is that Rene had pitched almost 100 other venture investors, all of whom had said no. He had, I forget whether it was 80 or 90 no's before I gave him a yes, which is really crazy. Like, oh my God, I must be making a mistake. Who would do this? I gave him this term sheet. We funded the company. It turned out to be an interesting idea. We sold the business to Intuit for $200 million. It wasn't a huge win, but it was a good business. Rene proved to be a very good entrepreneur. We did well. And then Rene started a new company. And I said, well, what's the new company? And I funded that company. And that company is Bill.com, which I'm still on the board of. And that was one of the best deals I've ever done, right? And so, the first deal was a good deal. It was a fine deal, but not a game changer. But it put me in a position to know Rene well, to understand the market and say, like, oh, this is a great business. And so we funded Bill.com and made hundreds of millions of dollars. And I still sit on that board. And then, by the way, in our Lobby One portfolio, we had this amazing company called Docyt, Docyt, that came in and pitched their business and what they were doing. And this is several years ago, pre-ChatGPT. They were building a business that would allow you to take your financials and reconcile them in real time using artificial intelligence. So you could understand, how much money do I have on hand? How many months of runway do I have? Who owes me the most money? What is outstanding? What are my best business lines? All these things that you can only do with a huge amount of data, a very thoughtful team that understands accounting, et cetera. And we just got super excited about it because we'd seen PayCycle, then we'd seen Bill.com, and now we're investors in Docyt, and it's just an amazing business. So, one foot in front of the other.
Congratulations, first of all. And I wonder, what were the things that you saw versus like the 80 other people who have like missed on this entrepreneur?
That's a good question. And ironically, right, Rene, it took 80 people saying no, and then I funded the company. And after that financing of PayCycle, every single financing of PayCycle thereafter and every single financing of Bill.com was preemptive. Every time someone said, can I give you this money? So he had to crush himself in order to get that first fundraised. And then after that, everybody came to him and said, hey, I'd love to give you money, right? This is great investor who I've worked with both in PayCycle and now in Bill.com, named Steve Piaker. And Piaker saw Rene at a conference and was like, I want to fund that company. And to his credit, hey, let me fund it. Funded PayCycle. And then similarly, it's like, oh, if you're doing a new thing, let me fund it, right? Just so what did I see? I don't know what I saw. I was just trying to be a rational individual. And what I saw was that Renee was a very, very thoughtful founder who understood the product problem incredibly well. And honestly, it just made sense to me. By the way, PayCycle was the very first small business SaaS business. There had never been small business SaaS before. So I suspect a lot of people like, you can't run an online business for small businesses. And certainly nobody thought that you could put, you know, your financial data in the cloud. No one would do that, et cetera. And I just thought, no one's going to care about that. What they want to do is pay their employees when they have time to do it, right? They don't want to call up ADP and say, David Hornik worked 20 hours. They want to go home. They're watching the History Channel. They're tired after a long day of work. It's 11 at night. They want to go on PayCycle and say, David Hornik, 20 hours, click, and be done. And that was my whole theory. And it turned out it was right. You know, sometimes you're lucky.
I wonder when it comes to, you know, like so obviously you have like big success at the very early on. What would be like, I guess, like when you're seeing, like maybe this is not yourself, but like when you're seeing other people's fund that are going under, like how do people really put through these like kind of times? Or do you feel like the fund just die and then you find another job or something? Like
Yeah.
how does like if let's say a fund didn't deliver the return, like what are people doing? Obviously, I mean, it's like observation, not like, I mean, I'm not talking about like you or in particular.
Yeah. No, I mean, it's interesting, right? I remember having this conversation with a founder when his business was going under, right? He was unable to raise additional money. And he called me up and he said, what do I do? We're out of money. What do I do? And I said, you let your employees know that we only have enough money to pay them what's owed to them today as plus outstanding, you know, vacation pay. And we're going to pay them that today. And they're welcome to keep their computers. And you wish that you could do more for them, but you can't. And then you call up your landlord and you say, unfortunately, we've run out of money and have gone out of business. And you leave the key and you take everything out of your office and you leave the keys on the desk and you go home. And the founder said, that can't be it. Like, how I've worked for 3 years and that's it. That's all you do. And I said, you know, unfortunately, when you run out of money, it's fatal. That's the end, you know? And so I wish there were a better answer, and we tried to get to a better answer, but there wasn't, right? And the same thing a little bit is true of venture funds, which is you can only be a venture fund if someone will give you money to invest. And then once you've made those investments, you can only continue to be a VC if someone gives you more money to invest. And so let's say your fund hasn't worked out yet and you can't raise more money. You have a couple of choices. You can hang in there and keep working with the companies, hoping that some of them work out. And that could be fine, right? That might work. Or you can say, gosh, I wish this worked, but it didn't. And you sell your portfolio companies and you close up shop and you're no longer a VC. Maybe some other venture firm will hire you. Maybe you made good choices, but the firm didn't. Maybe you go do something else. I remember working with a very lovely venture investor who I liked a lot, but he made a set of investments that did not work out. And he went back into companies and he was back working, doing biz dev. And he was a good biz dev guy and he ended up doing quite well, but he just wasn't a successful venture investor. Was it because he was a bad guy? No. Was it because he was stupid or wasn't going to be a good VC? You know, probably not, but it could have just been bad timing. Could have just been bad luck. Or it could have been that he didn't appreciate the kinds of things that made entrepreneurs most successful, et cetera, right? It's hard.
I wonder, I want to be mindful of the time. And then I have like one real question and then 1 minute fire round for you. So I wonder, so like since you have invested in like, for example, Brilliant, which is like a smart home like company, and then there is like Maintain X, that's like, for small business, like you just mentioned, and build.com, that's like for, small business financing and stuff. So I wonder, when it comes to all these different sectors, um, do you feel like you're more of like a thematic investor who study a particular industry really hard and then chat with everybody in that particular sector? Or would you be the investor who chat with everyone at lobby conference, or like, or just like in general, like meeting entrepreneur everywhere, and then you try to figure out if you would invest in the company?
Yeah, I'm not thematic at all. I like to, the thing that, one of the most important things to be a good VC is to be intellectually curious, is to actually be excited to learn new things. And so, yeah, I'm lucky that some companies have done well. And so I get to hear about other companies in that space, right? We got to hear about Docket because we had done well with Bill.com and PayCycle and a company, WePay, that we had funded. And so, great, I'm going to see fintech deals, and that's great. But, I funded Brilliant because the founder had worked at a previous portfolio company of mine, and he had then been called Six Apart, which had a bunch of amazing people. And then he had been funded by one of the founders of Splunk. And so I got to see that deal, and just thought that great founder trying to solve a real hard problem in the IoT space, et cetera. So my interest is just meet amazing people, hear what they're working on. If it strikes me as interesting or exciting, do the work to figure out if it in fact is. If I think through all of that it is, then give them a term sheet and hope you can fund them. I mean, it's interesting. While we've been doing this, I've been, my text messages have been churning. I got 2 calls from 2 different of my partners, and then there have been text messages, and it's all about a deal that we saw on Monday, right? There was a deal that we saw, and then, half of us thought it was a great deal, and half of us had some questions, and there was a bunch of questions to be answered. And I don't know exactly what the texts are about, but I suspect that someone thinks it's an interesting deal and wants to fund it. And what do we know? And right, like, this is the process. You just get excited. And by the way, this is in the autonomous driving space, which is a very complicated space in some regards. But this solution is a very thoughtful, interesting vertical solution of the autonomous driving space. And so, like, if you had asked me, as you mentioned at the very beginning, I have a degree in computer music. I have a degree in criminology. I have a law degree. And if you had said, David, are you qualified to judge whether you should invest in an autonomous driving startup in a verticalized space? Say, well, how could I possibly be? And on the other hand, if you ask me today, can I help to make a reasonable decision about this particular company that is an autonomous driving platform in a particular vertical space? Say 100%. Not a problem. I understand the challenges. I understand the software. I understand the distribution. I understand the buyers. Is it a good idea? I don't know. Will it be a great company? I don't know. But I can tell you that while we're having this conversation, my partners are texting each other discussing whether we should fund the company.
Amazing. I will definitely want to do a part 2 on if you fund the company. So I have a 1-minute fire round for you, so you can go back to the discussion of if you should fund the autonomous driving company. What is a question that you ask every founder?
Well, the core to every founder is, what problem are you solving? That's number one. What do you solve? What's the problem? Because if there's no problem, then it's not a solution. And then my second question is, who's your customer? And you should have great answers to both of those questions. And if you do, then I'll dig in further. And if you don't, you're not building a big, interesting business, or at least you don't yet know how to build a big, interesting business.
Okay, so we're gonna switch to the lighter side, which is, what's your favorite book?
My favorite book? Well, I've been collecting Alice in Wonderland books.
Oh my God.
For years, because there's so many different illustrations of the book. And so there's the exact same text, but each one is different because the artist has come with some different vision of what the rabbit looks like and what the Mad Hatter looks like and all this stuff. And I just love that juxtaposition of some part of it is always the same and some part of it is always different. So I have hundreds of Alice in Wonderlands.
Who would you invite to your dinner party?
Who would I invite to my dinner party? I would invite musicians and artists almost assuredly. You know, I would invite Philip Glass. he's done some astonishing things. I think it would be incredible to, I mean, I'm sort of obsessed at the moment with classical music for no particular reason. This is the internet. Like these short, I get into these loops of incredible videos of like an astonishing violinist and then this trumpet player playing with circular breathing. So my dinner party would probably be Philip Glass and Yo-Yo Ma and Itzhak Perlman and Wynton Marsalis. I mean, Joshua Bell. I just saw Joshua Bell play. He's this one of the great violinists of all time. Like, I would love to just sit around and talk with these folks. Because they're just heroic.
Who made the biggest impact in your career?
I'd say that look, in the end, Mike Patrick did, because he introduced me to the founders who created Splunk, and that was a transformative thing. But of course, there have been many other things. Dave Marquardt, who founded August Capital, saw me at a board meeting as a lawyer and thought, well, maybe he'd be a good VC. And so that's astonishing. But I would go back even further. I lived in a freshman dorm at Stanford called Branner, and there was a professor who ran the dorm named Cannell Jackson. And Cannell was this wacky professor. He led the African American Studies department, but he was a fascinating guy, and he was completely, he was the most intellectually curious person I'd ever met. And during my freshman year, I spent a bunch of time talking to him, and then I came back and was the RA in that dorm my junior and senior year, and I spent a huge amount of time with him. And so I just learned from his vision of the world that everybody you encounter knows something that's interesting, and as long as you ask them, and if you encounter someone and they've demonstrated something that's interesting, ask them more about it, because it's always fascinating. And I think that worldview is what has carried forward to make me, make me a VC and give me the opportunity to fund these amazing companies.
Amazing. Where can we find you outside of work?
My wife and I are art fanatics. This painting is by an incredible artist named Chantal Joffe, who's a British painter. And in fact, we had the incredible fortune of going and visiting her in her studio in London last week. I think it was last week, and she's working on amazing stuff. So when I'm not doing this, or you'll likely find me in some museum or some gallery or some artist studio. I just think artists are astonishing.
What's the best studio in the Bay Area?
For art studio or museum or
both, maybe.
Yeah, I mean, there are lots of fantastic places, right? I mean, my wife and I helped to launch the ICA San Francisco, the Institute of Contemporary Art. It's a new museum, and we show just beautiful shows of contemporary art. We've worked with lots of great gallerists in the Bay Area. Jessica Silverman represents one of my very favorite artists. A number of astonishing artists, but this artist Rebecca Ness, who I adore, who's this New York artist. So thank you to Rebecca and to Jessica in that regard. The very best photo gallery in possibly the world, a gallery called Frankel, is in San Francisco, and it's just fun to see astonishing photographs. And so there's so many more. There's just an infinite amount of art. And then, by the way, I sit here by Stanford, and Stanford has two amazing museums, both of which my wife sits on the board of. The Cantor Art Center, which is this sort of encyclopedic museum that has this beautiful art. And then next door is the Anderson Collection, which is another independent collection of art that was collected by this couple, Hunk and Moo Anderson, and has wonderful work. So there's lots of great art to be seen.
Amazing. Well, David, thank you so much for coming on the show today. It was a wonderful conversation. We went to so many directions from
Yeah, so
venture to
fun.
start. Thank you so much for taking the time.
Really great talking to you. Thanks.
Let me quickly end stream.